Hey guys, Dan Richardson here. We're here with today Matt Centrone from Centrone Finance. We're just going to have a little bit of a chat about, I suppose, first home buyers and what you guys can do to sort of better your position in the market and hear from an expert as opposed to hearing from real estate agents. So, Matty, thanks for the chat today.
Yeah, cheers, mate. Thanks for having me.
No worries. I suppose we'll start off. We were just having a little bit of a chat before about first home buyers, and I suppose some of the misconceptions that people have about sort of getting themselves ready for, I suppose, large debt. You know, and I suppose I just want to hear a bit of your insight on what I suppose some of those issues are and what people can do to sort of better their positions.
Yeah, I think the first thing is really building up your savings. I think the market's changed a little bit, whereas maybe 5 to 7 years ago, banks were letting clients or applicants get into the market with quite low deposits. There are still banks out there that'll do that, but a lot of the major banks, and especially the government as well, is sort of putting pressure for people before they take the plunge into home ownership to have a little bit behind them. And look, it is one of those things. Rates are really low at the moment, so first home buyers, they'll look at what they're paying in rent, and then they'll look at what a mortgage repayment would be, and they say, yeah, we can do it quite easy. But the market does turn, so I think the key thing that I would say is build up your savings, and by doing that, you also do put yourself in a little bit of a position whereby each week you are putting a bit away. It's almost it sort of is similar to each week having to pay a mortgage or each month having to pay a mortgage. So that's a key factor that I say to people that are starting out. They're in the first home buyer market, especially in South Australia, where look, our property prices are a little bit lower, but we actually have the highest stamp duty in Australia. And now we don't have a first homeowners grant for established properties. We only have it for brand new properties. Mm-hmm. So if you are looking at it, an established area or a unit or a townhouse that's in, inner city, you're probably not going to get a grant. Mm-hmm. So I think, building up on the savings, that would be the key thing.
And what about, good advice, and what about the notion that, I know when I was, looking at buying a property, my parents, the advice that they gave me, albeit probably not relevant now as far as I'm concerned, they told me, you've got to get some debt to get a credit rating. How does it sort of relate to the market now?
Yeah, it's a good question. I think, look, there's a bit of a myth saying that you need to have a little bit of debt. You need to have a credit card or a car loan before going for a home loan. Look, it doesn't necessarily work against you, or it doesn't necessarily work for you. There's a lot of factors that the bank will look at. I think more so now, I think banking's changed a little bit. And the things that they're looking for is stability with employment. So, if you've just started a new job, I'd say, look, maybe wait 3 to 6 months, just so, you're off your probationary period. Those are the things that the bank will look at. They'll look at also, things like, overtime and commissions and bonuses versus your base income. So just keep in mind that if you've got like a job where you've got a low base but you do a lot of overtime, you probably want to speak to your bank or your mortgage broker before putting in an application, because those are the things that the bank's going to look at more so than whether you've had a credit card or a car loan. I think, the key thing is stable employment, good savings. If you've got a car loan or a credit card, hey, that's going to add and you make good repayments, but it's not the be all and end all. Definitely not.
Yeah, good advice. I know that when I was as I said, when I was coming through, it was always a case of get a credit card so you can get some debt. And nowadays we know that there's massive credit card debt and people can get themselves in a lot of trouble. So it's really good advice. So I suppose let's do a little bit of talking about, and obviously with the emergence of the startup and the self-employed person, I suppose having borrowed money prior to and gone through you and gone through the rigours of being a business owner. Maybe talk a little bit about that and just the people who are out there who are in business for themselves, about what the differences are between, say, them as a home purchaser or potential borrower, as opposed to someone who's employed full-time with a salary.
Again, you and I are both self-employed, running small businesses, so we know what it's like trying to put our financials together for the bank. I think, again, a myth that I sort of have in the marketplace when I'm talking to small business owners is, I run a small business, it's really hard to borrow money. It's actually not. It's actually not, but you just got to know the rules of the game. And look, the general rules of the game are that the bank wants to see a little bit more history compared to if you are an employee. If you're an employee working for a big company or even a small company, if you're full-time, part-time or even casual, the bank can look at your pay slips and go, look, we pretty much know what you're going to take home each year. With a business, it's a little bit differently. You know, 1 month, you could have a really good month, the next month might be a bit slower.
Yeah.
So, a real estate business, a finance company, someone that's running a restaurant. Restaurants can be seasonal. If they're based down at the beach, summertime they're going to make a lot more money than they do in winter. So what the banks generally want to look at is what's your earnings been over the last couple of years.
Right.
Now, again, this has probably been a change in the marketplace from a very positive perspective for small businesses. A lot of the banks now, they used to look at 2 or maybe 3 years of earnings. Some of the banks now are only looking at the most recent year.
Wow.
I think the key factor is a lot of small businesses, and I do a lot of business with accountants and financial planners. I know doing your tax is always a bit of a pain in the neck, and people tend to leave it a little bit to the last
minute.
They hold off to the last minute, and I can tell you around May, June is when a lot of people say, we've got to get our tax done, and they do it. The thing is that if you always wait till the last minute, if an opportunity comes up where you want to buy a property or a new home or an investment property or even a commercial property, depending on the time of year, the banks might ask for updated statements. So I think the main thing for small businesses are if you can do your financials as quickly as possible, A, you'll stay ahead of the game with the ATO, which is always a good thing.
Absolutely.
And B, you'll always be in a pretty good position from a borrowing capacity because the bank can look at your most recent year and say, hey, okay, it's looking good. Also, like if you've had a look at the decline in sale, they can look at your previous year as well, take that into consideration. There's ways that can be done. Again, I would say, the best thing for a small business owner is, look, speak to your bank, but I would honestly say that a mortgage broker has a little bit of an advantage dealing with small business owners. If you can find yourself a good mortgage broker, they'll know which bank, Centrone Finance, but they'll know that, and we've got some great people here, not just myself, but they'll know which banks have different policies for small business owners. So, you might be with a great bank that, has all the bells and whistles, but for small business, their policies might not be
I found that definitely.
yeah, they might not be, akin to your business. So, a mortgage broker who knows the market might say, hey, this bank over here is really good with small businesses. They'll look at your financials in a very positive light, and you can get it across the line. So, again, the key is really being organised.
Cool. Thanks very much, mate. We'll call it that for a day. People are obviously busy. If you want to get in touch with Matt, it's matt@centronefinance.com.au. Your website, centronefinance.com.au as well, or you can find him on Facebook. If you do have any questions, if you're a first home buyer or business owner looking to refinance and find the best deal in the market, look up Matty, or you've always got myself to call. Thanks very much for your time.
Cheers. Thanks for having me, Dan.